Apes and apettes, welcome back to another installment of Valentine's Day Hat with TCI. Don't know what else to call it, but let's dive into this video. There's a lot to go over. AMC is holding above $15 per share, which is a good sign. We are down about 4.27%, but all eyes are on Apple. It's either make it or break it for the markets in after hours. If Apple has bad earnings, the markets are going to come down in a very substantial way. If earnings are good, we're going to see another short-term bounce. But there is some data points that I want to go over to suggest to you guys that Apple's earnings may be bad. Now, I'm like 95% certain I will be buying Apple puts, but if you guys are ill-experienced in options or you just want to join a great community where I send out every single trade that I make, check that link out down below in the pinned comment. I can be somewhat of a mentor to you, but I am not a financial advisor, so keep that in mind. If you make trades that I make, you are liable to lose money or make money alongside me. We do very well though overall, so check that out if you guys want to. Also, make sure to get 5 free stocks when you sign up for Moomoo down below in the description of this video, as well as in the pinned comment, because they are one of the most versatile trading platforms that I have ever been a part of, and I am very proud to have them sponsor this video, so check them out. But without any further ado, let's dive into this video. And AMC is still above $15 per share. You really fight around $15. So I think it's going to take a big move in the markets to the downside to keep us under $15 per share. Like I said on Sunday, my price target was $15 per share. So I would bet that it stays around 15, a little bit over, a little bit under, definitely not off the cards at this current moment. Now, I do first off want to start off this video by going over this article. It says, buy the dip, Ford, Citigroup, and AMC. We're going to skip the Ford, skip the Citigroup, and go straight to what they said on AMC. So they said not only did AMC's stock fall by 12% last week, it's also fallen 36.99% in the past month. In fact, AMC stock is about to set its largest decline from a peak ever. Is this an opportunity to buy and bet on the next rally, or a sign that the meme saga is reaching an end? Right now, the unwind continues according to the Street's Daniel Martins, and it has no end in sight. Now, I do want to skip down to this segment right here. It says, here is where the glass half full argument comes into play. Most AMC shareholders know very well that the stock does not trade on fundamentals, but on buzz and excitement instead. From the point of view, AMC continues to be a popular meme stock on the verge of undergoing a massive short squeeze, Martin adds. The ticker is still a top 5 most discussed on Reddit according to Ape Wisdom, and with nearly 20% of the float shorted, a run to cover short positions could help trigger a rally at any moment. So when will the next bullish attack begin, or will it happen at all? Stay tuned, as 2022 may provide an eventful year for AMC stock. They also said that it's more so trading close to its fundamental value. It says right here in quotes, whether this is a good or bad news is open to interpretation, Martin said. The glass half empty view is that AMC's share price is finally descending to levels that are a bit more consistent with the company's fundamentals. Exactly what I have been saying for a while now. The fundamental valuation, you can make a case, is about 20, if not in the mid 20s, but retail is not buying retail stocks as much as they were. Certainly institutional investors are not buying stocks as frequently as they were. People are kind of waiting for the bottom. So with that being said, these stocks that are more, growth stocks, which AMC now is, probably not considered a growth stock, but it's certainly a recovery growth stock, to say the least. With 2022 is going to certainly be the best year we have seen since the pandemic. It begs the question, is AMC worth a buy on a fundamental basis, and is a short squeeze just an added bonus to this? I personally think so, and I think AMC is a really, really good buy right now. I mean, the question is, are we going to get volume? Are shorts going to cover? And it's most certain that shorts are going to cover. There's no way around that. They have to, quite honestly. So that's what I wanted to point out to you guys as far as this article is concerned. Some pretty bullish things that they are saying to literally buy the dip on AMC. Now, as far as Apple earnings, so I first off want to talk about Fed Jerome Powell, because there is still a lot of digestion that has to happen. And what he said yesterday didn't really give us full clarity, but he said some very hawkish things. Like, he said he predicts inflation is worse now than it was in December, and that the economy could support additional rate hike increases if that is needed to control inflation. So you mix the two together and you get an outcome that does involve more rate hike increases than the markets did expect, while also confirming their balance sheet is going to start going down. And this is a new thing, because since 2008 the balance sheet was only $800 billion. Now it's sitting at almost $9 trillion. So people know, and this is what analysts are saying, people and investors, they know what to expect when you raise rates 0.25% or 0.5%. They know what kind of liquidity will be pulled out of the markets, but nobody knows what liquidity will be pulled out of the markets if you start decreasing the balance sheet by $1 trillion or $2 trillion. It's really uncharted waters, and that's why we're going to be so volatile. But just to reiterate yet again, when the markets come down, hedge funds have less money to service their margin calls. So AMC will not just squeeze because the markets fall and all stocks get beat into the ground. It won't squeeze because of that. It will squeeze when the markets are beaten down into the ground and AMC gets some kind of good news. Now, it may be the fact that they are refinancing their higher debt. That changes the fundamental valuation of AMC and completely crushes the bear thesis on AMC, but we'll have to see how that plays out. All in all, I think there's many catalysts over the next couple of months that could cause the MOAS, and in my personal opinion, will cause the MOAS. So very exciting as far as that. Now, directly as far as Apple's earnings, we do have those today in after hours. The earnings call is going to be at 5 p.m. That's going to be more important than the actual numbers here, because people want to know what the companies, especially Apple, the largest company in the world, expects to do as far as revenue in 2022. That guidance is going to be key. So Apple could definitely have a 10 to 20% move to the upside or the downside based off of this. And Apple controls almost 12% of the broad market. So if Apple falls 20%, the broad markets are surely going to see a 2.5 to 4% down day across the indexes. So another way you could trade Apple earnings is just by playing the indexes, and that will give you pretty much direct exposure to Apple because it is about 12% of the broad market. So I might do some trades based off of that. If you guys want access to all of those trades, like I said, link down below in the pinned comment. But the real data point that I have been looking at and watching to see if this goes back up over the past couple of weeks is simply in Google Trends typing in iPhone. iPhone since right here, October 10th, which would be Q4, that's the earnings report we are about to get, has fallen off of a cliff. This is a 5-year chart, and the interest is at five-year all-time lows. So with that being said, this is definitely, in my opinion, has to reflect the revenue and the interest that Apple is receiving in iPhones. So with that being said, I do think this is an indicator to us that Apple earnings are probably not going to be as good as people expect, because the expectations for these companies are just outrageous. There is no room to disappoint when it comes to earnings right now. Companies will get punished for that, and I think this is a leading indicator to say, hey, Apple might just be about to take a beating, and Apple is actually up about 2% today. So it's a pretty good time, in my personal opinion, to look at maybe some Apple puts, maybe some SPY puts, and that's exactly what I am looking to do. As far as that, the Federal Reserve did just come out with a survey report, whatever you want to call it, that said people are not spending as much money on non-essentials. So essentials would be like transportation, housing, food. People are spending money on that. They're not spending as much money on, say, Apple products that are not a necessity. So another interesting thing to keep in mind, I'm sure they will talk about the slowing down demand on their earnings call, because obviously this shows a slowing down demand, if I were to say so. But let's dive into more of the data around AMC. and what you guys really need to know. Briefly, the max pain is $18 by the end of this week. So keep that in mind. That would indicate a pretty substantial move to the upside. I don't think we are going to 18 by the end of the week. I think $15 is very reasonable, and I think that is a reasonable expectation to expect. As far as the Untitled Tracker data is concerned, we're looking at 6 million shares that are available to be sold short. As far as the actual calls, we're looking at in the money calls at 4,400, out the money calls at 173,455. So if Apple, for whatever reason, does go up a lot and the markets do bounce, you could see shorts rushing to cover on their short positions, and you could see a mega bounce as these calls will start to go in the money. Same thing on the put side, about 57,000 puts that are in the money, 44,000 puts that are out of the money, and these mega bounces really happen when you have a lot of puts that are in the money, like we're seeing, and a lot of calls that are out of the money. So when the stock goes up, puts run out of the money and calls run into the money. Both of those are forms of buying power that have to happen on the open market. So I wouldn't bet on this. I wouldn't make any options trades on this. But if we do see good Apple earnings, then that is something that I would kind of look forward to as an added bonus to end off this week. Now, I also do want to point out it's going to be very important to see what happens tomorrow, because Fridays tend to be, obviously the end of the week, and then you have the weekend. So people either sell a lot of stocks or buy a lot of stocks on Friday. Lately, we've seen people sell a lot of stocks on Friday. So if we do see that, that's going to confirm up another potential leg down for next week. If you see a lot of selling tomorrow, not good for the overall markets. Obviously good for our cause if you do want the markets to come down. Now, as far as the Ortex data, let's give this a bit of a refresher, and we're looking at 20.17% short interest of free float. We did just have the exchange reported short interest day that was yesterday, and this is for the short interest of January 14th, and we were at 18.9%, 2.35 days to cover, and the estimated shares that are sold short of about 103.54 million, cost to borrow max at 2.32. I still think these numbers are bullshit, but take it for what it is. Share utilization is 74.19%, days to cover at 2.52. So still all of this at very, very elevated levels, and something to be excited about when it does come down to the actual short squeeze. Now, just taking a look at the charts again, still above $15 per share. We are really fighting around 15, as you guys can see, hanging out at this level for a majority of the day. But what I want to point out is that your worst case scenario, I would imagine, is around $10 per share. That's if the markets go into the absolute toilet. That's if the SPY, pull that up, that's if the SPY falls to like $360 per share. That's hardly off of your pre-pandemic levels. I don't think that's as likely. I do think we will fall to about 400, possibly under 400 to about 380. Worst case scenario, about 365. So can AMC go lower? Sure. Will it go lower? I don't think so. I think the sell-off will slow down as it's already gotten shorted and beaten into the ground. And that goes for the other small and mid cap stocks as well. I would much rather short, if I were to short, stocks that have a lot of meat on the bone, like Apple and your large cap stocks, compared to a stock that's prone to short squeezes like AMC that's already been shorted into the ground. So hopefully that makes some sense, you guys. That is going to conclude this video. Like I said, want access to all of my trades in real time, link for that in the pinned comment down below. Check out the sponsor of this video, which is Moomoo. Thank you guys for sponsoring this video. Hit the like button, subscribe to the channel, all of that good stuff. Spread the love in the comment section. That's why we got the hat on. It's almost Valentine's Day, baby. Look forward to seeing you guys later on tonight on the live stream, 10 p.m. to 11 p.m. Eastern Standard Time, Sunday night through Thursday night. The only days we do not do that are Friday and Saturday nights, because you don't have trading the next day. There's no futures, none of that stuff. So love and appreciate you guys. Thank you for watching. I will see you in the next one.